Australia reopened its border, and what followed was the biggest migration surge in the country's history. When you are managing a national budget with an aging population and rising healthcare costs, those numbers carry real weight in decision-making room. Population growth is going to remain elevated. That is 4.1 million additional people over the next decade, mostly landing in the same already constrained capital cities. The picture that emerges from all of this data is one where the structural forces pushing prices up are significantly stronger and more durable than the forces pushing them down. What is happening in the Australian property market right now is not random and not a mystery. It is the very predictable result of a government reaching for migration as a short-term economic tool without solving the supply side at the same time. And the property market is going to be reflecting the consequences of that for years to come. In this video, we are going to walk through what is actually driving the prices, why the government made the decisions it did, and what it is doing to property supply stock, right? And where the market goes from here, right? So let's not waste our time. Let's jump right into it. So Australian property prices are doing something that honestly should not be happening right now. For example, interest rates went up hard and fast, cost of living is crushing household budgets, and yet property prices in most major cities are still climbing. And if you are sitting there wondering how that is even possible, you're asking exactly the right question, because the answer is not simple and it is not one thing. It is a combination of all factors pushing in the same direction at the same time. And once you understand them, you will have a very different view of where the Australian property market is heading. In this video, we are going to walk through what is actually driving the prices, why the government made the decisions it did, and what it is doing to property supply stock, right? And where the market goes from here, right? So let's not waste our time. Let's jump right into it. So the starting point for understanding the Australian property market right now is population growth, because you simply cannot talk about housing demand without talking about how many people are actually arriving in Australia and how fast, right? So after COVID-19, right, Australia reopened its border, and what followed was the biggest migration surge in the country's history, right? Net overseas migration hit 528,000 people in 22-23 alone, which is like adding a city the size of the Canberra in the housing market every single year into a market that simply was not built to absorb that kind of volume that quickly, right? And even as the government has been pulling numbers back down to 429,000 the following year, and then 306,000 in 24-25, the figures are still historically elevated, right? And still represent an enormous amount of additional housing demand landing in Australian cities every single year, concentrated almost entirely in Sydney, Melbourne, Brisbane, and Perth, which are already the most expensive and supply-constrained market in the country, right? And when you look at where this is heading, the government's own population projections show Australia's population growing by 4.1 million people over the next decade, with most of that growth landing in those same capital cities, right? That is 4.1 million additional people who all need somewhere to live in cities already struggling to build enough homes for the people who are already living there right now, right? And that number alone tells you a lot about where the property is heading, regardless of what happens with migration policies from here on. Now, here's the part that most people do not fully understand, and without understanding it, you really cannot make sense of how we really got here in the first place, right? Now, the question is pretty simple, right? Why did the government keep migration so high for so long, even as the housing pressure was clearly building, right? And the honest answer comes down to one thing, right? No government wants to be the one that presided over a recession, right? Essentially, as a political party, you get this 4 years to sort of prove yourself, right? And a recession in year 1 or year 2 defines your entire term, regardless of what else you sort of achieve in your term, right? It follows you, right? It becomes your legacy, and it almost certainly costs you your next election, right? So coming out of COVID-19 with interest rates rising fast, household spending kind of slowing down, and the economy genuinely sort of fragile, the government reach for one of the most immediate tools available to keep growth positive, and that is population growth, right? When you bring in large number of people, they arrive and immediately start spending, right? Paying rent, buying groceries, using services, and all of the demand flows through the economy and keeps the GDP number out of the recession territory, even when existing residents are tightening their belts, right? Now, look at this article here, right? Australia avoided a technical recession largely due to population growth during this period, right? And there is also a larger term fiscal argument that sits alongside the short term logic, right? Research found that every permanent skilled visa holder generates a fiscal dividend of $249,000 in today's dollar over their lifetime in Australia because they pay significantly more in taxes than they ever draw in government services, right? And cutting skilled migration by $135,000 over 4 years would cost government budgets $34 billion in net lost tax revenue, right? When you are managing a national budget with an aging population and rising healthcare cost, those numbers carry real weight in decision-making room, right? But here's the honest reality, and this is something the data makes very clear, right? Now, using migration as one of the economic lever is a short-term fix with a very long-term consequences, right? And those consequences fall almost entirely on the property market and on anyone trying to find somewhere affordable to live. Now, understand this, the mechanics are very simple. When you add hundreds of thousands of people to a housing market every year and the supply side is not keeping up, naturally the prices will go up. And the data on what has happened to property prices during this period is very clear, right? Despite the fastest interest rate hiking cycle in a generation, national property prices recovered from the 2022 correction and have been climbing ever since, right? With tight rental markets and a relentless population growth providing a flow under prices that interest rate rises simply couldn't break through. And the rental market tells even a more dramatic story. Vacancy rates have been running at or near historic lows across the country, right? In some markets sitting below 1%, and rents nationally have gone up nearly 44% since the start of the pandemic, which translates to roughly $10,500 more per year out of the average tenant's pocket, right? Again, that is a staggering number, right? And again, it is not a temporary blip, right? It is the direct result of adding 1.4 million net migrants into market. There was no building fast enough to house them, right? And with the government's own population projections showing 4.1 million more people over the next decade, it is very clear that this upward pressure on both rents and prices is not going to resolve quickly. So if the demand is surging, why is Australia not just building more homes, right? And again, this is where the story gets a little bit complicated because it's essentially not one problem. It is several structural problems all hitting at the same time. The government's own independent housing advisory body released their State of the Housing System report in 2025, and the findings are stark, right? Only 177,000 new dwellings were completed in 24 against an underlying demand of 223,000, and they're forecasting a shortfall of 262,000 dwelling against the government's own 1.2 million home target by mid-2029, right? With not a single state on track to meet its share, right? They describe the housing system as being under a lot of pressure with a crisis that has been decades in the making, okay? And the reasons supply is not keeping up are multiple. For example, we got labor shortages in construction, right? Then we also have high material cost. And again, the system planning is slow and extremely complex, right? And critically, the fact that many projects simply do not stack up financially right now because lending costs, financing costs, and construction costs have all risen sharply together, right? Again, the last point matters enormously because it means this cannot be fixed just by announcing bigger housing target, right? The economics of actually building new homes really have to work, right? And right now in many markets, they do not don't work. And again, there is a painful irony here too, right? The RBA raised interest rate to fight inflation that was partly driven by population fuel demand, right? And those same higher rates then made it more expensive for developers to finance new projects, which slowed the construction down, which kept the shortage going. So let's bring all this together to talk about what it actually means for Australian property going forward, right? Because that is really what this video is about. The picture that emerges from all of this data is one where the structural forces pushing prices up are significantly stronger and more durable than the forces pushing them down, right? Population growth is going to remain elevated. That is 4.1 million additional people over the next decade, mostly landing in the same already constrained capital cities, right? The construction industry is running 27% below the government's own housing targets with no realistic prospect of closing that gap quickly, right? And even if migration moderates significantly from here, the backlog of unmet demand from 1.4 million net arrivals since pandemic is already embedded in the market and is going to keep supporting prices and rents for years to come, right? And what makes this particularly significant is that the government's own housing advisory body projects that supply will remain below demand for the entire 5-year period through to 2029, right? This is not a story that resolves in next year or two. The structural mismatch between population growth and housing supply is a story that runs through the rest of this decade, and anyone making property decision needs to understand clearly, right? So the honest takeaway from all of this is that what is happening in the Australian property market right now is not random and not a mystery. It is the very predictable result of a government reaching for migration as a short-term economic tool without solving the supply side at the same time. And the property market is going to be reflecting the consequences of that for years to come. Whether you are a property owner, an investor, a renter, or someone trying to figure out whether now is the right time to buy a property, understanding this structural forces gives you a much more clearer picture of where things are sort of heading than any short-term noise about interest rate or auction clearance rate, right? So yeah, if you found this video useful, drop a comment below. I would love to know what you think about where the Australian property market is heading. Again, thanks for your time, and I'll see you in the next one.